Today, folks, we continue the updates surrounding Johnny Depp and Miss Heard in the defamation trial. Absolutely not. No, we are diving down into mega cap growth earnings that are dictating the entire future of our financial well-being in the coming months here, folks. So we're going to be focusing on Qualcomm today, of course, with Facebook. Could Facebook go any lower? I feel like we're getting close to a bottom here. We damn well better be. And hopefully this earnings compared to the last one when they ripped the Band-Aid off, that they're going to hopefully surprise us a little bit. That's coming up in the next 15 minutes. So I want to quickly recap where we're at and where we're probably going, because we just recently saw Microsoft and Google being the major first kind of tech earnings outside of, Netflix for entertainment and media. But basically most of the growth, Microsoft crushed it at all levels. Google missed a little bit. I didn't catch too much of the earnings call on that one. I really listened to a lot of Microsoft, but I noticed a few things between both of them, and it's that they're highly fixated on pushing the cloud business. And the cool thing with Microsoft is I kind of got an insight into why they're basically going after Activision. We're starting to see a slowdown in growth on the gaming division. So when we're talking Xbox and all that stuff, I think they have 3 or 4% rev growth. So I figure that they're looking to acquire businesses where they're seeing a lackluster in performance. So that would make sense why they wanted to go after Activision. So outside of that, guys, Google, the earnings were really decent. I think these are going to be great buying opportunity. Something tells me if you're buying them at these suppressed prices by the end of the year, you probably won't be complaining if you can ride out the volatility. But we got some major movements coming tomorrow. Tomorrow's going to come out of the big guys. We're going to get a full insight into Amazon, which, if Visa's earnings and UPS earnings have anything to say about it. UPS said there's going to be a slowdown in e-commerce growth, but not stopping, obviously. And Visa consumer spending was through the roof. So who knows, maybe that bodes well for Amazon. But if Apple or Amazon miss by any metric, we're still going to see extreme volatility throughout the rest of the market. So on that note, let's just take a look at the stocks, where we're sitting at right now. So Microsoft did fully rebound after dropping insanely after hours when we were doing the live updates before recovering, but we're trading up 5.42% with Microsoft today, guys. UPS actually rebounded off, selling off. I don't have it up here, but Google still trading down toward close here at about 3.66%. So Facebook, guys, what do we got to say about Facebook and Qualcomm? I don't know. Apple's got some good demand, but as we mentioned, Apple is pushing out shipment dates. So I'm curious if that is because of the insane demand and things are just that should bode pretty well. Or are they going to mention that they're going to be lowering a bit of guidance because of the supply chain issues going on in China? There's a lot of mixed feelings about it based off their last quarter. You just don't know. You don't know. So we'll see what the comparables are over last year's Q1. But nonetheless here, folks, Facebook going into close. We got about 10 minutes left here at $1.75. Oh my God, man, this is brutal. So I'm still highly confident that if you believe in Facebook long-term, and if you guys haven't tried the VR yet, I'm very excited for the next release this year and quality that's going to be upcoming with these things, because I'm still using this thing religiously. I'm finding more reasons to keep using the Oculus. So like I said, my initial thesis with Facebook was that you're going to get this fundamental, incredible growing business that was growing at like a 20% clip, and you could literally get the cherry on top of the cake with VR, with them getting into NFTs and crypto. I think it's going to be huge potential. I think Mark Zuckerberg has incredible insight into where the future is going, and that they're an industry leader in that aspect when we're talking about VR, AR, and just crypto in general, other than they've been getting a lot of red tape thrown at them when it comes to the crypto side of things. But now the problem is their fundamental business is slowed down to the point where they've offered revenue guidance on that last earnings to be around 8%. So if they can smash that 8% earnings guidance, then we're in the green. There's no way Facebook's going to do bad. But the question is, and like I said, one of my biggest fears with Facebook was that one little hint of tidbit advice in that earnings call from last quarter, that they are seeing a slowdown in conversion rates, and that scares the crap out of me because they directly said it's from small business. And if small business conversion rates drop, I don't think that inclines people to increase spending. If anything, that it's going to incline them to find another place where they're getting better ad conversions. For example, TikTok, right? Like I've been slowing down on my TikTok game. I need to pick it back up, but my girlfriend's into TikTok. Everyone I know that's on TikTok is crushing it. And TikTok has a really intriguing way of generating revenue. They're not exactly as clean cut as Google is from like a YouTube standpoint on ad generation, but I've been messing around with TikTok and how they deal with sponsorships and all the back end stuff now that I've kind of gotten to that level on that platform. And I gotta say, man, TikTok is definitely, making YouTube and obviously Facebook work for their money now. And it was really intriguing too, because I've always kind of compared, like, considering I'm using these apps pretty consistently, YouTube has a big problem with their shorts. And I've noticed a lot of YouTubers in the finance space, especially like real estate, like Grant Cardone. There's a few other guys that are finding they're getting more traction in the shorter, video format. So you'll notice Grant Cardone doesn't even really do long video format on his YouTube channel anymore. And he's purely doing the shorts. But I've noticed a lot of side-by-side comparisons that YouTube shorts do not get pushed the same way they do on TikTok. And I feel like people can understand TikTok's algorithm a little better than they can understand YouTube's algorithm, because TikTok's based off showing it to an audience, a brief audience. So maybe you make a post and then within the first 10 minutes, 20 people will get shown that video. And then if it does well and the watch time's good and the engagement's good, it's going to get shown to 1,000 people. If it continues to do well, before you know it, you're getting 1 million views in a few days. I've been seeing a lot of success come out of that. So like I said, I don't know what to expect out of these earnings, guys. That's why I've sidelined my investments. As many of you know, I'm still sitting on a crap ton of cash, and I'm likely leaning more toward the index fund side of things. I should be buying, if anything. I think this is a great time to start picking up Microsoft. Google's at a great point here. We're just kind of baking in the certainty. And that's what I want to get through, because, I really think the inflation risks are largely set behind us at this point. I think we've seen the worst of inflation. I could be wrong on that, but from all the data I'm seeing, when we keep going through the commodity prices, guys, commodity prices are falling. They're all dropping. They're all nominalizing. So I think anyone that's running around with a pitchfork waving on inflation, that it's the end of the world, I think they're still looking in the past and they're not looking forward. So I think the only real risk we have at this point, considering UPS posted great numbers, Visa posted great numbers, all our consumer staples from the big giants, whether it's Procter & Gamble, Pepsi, all posting great quarters, Coca-Cola. So the economy is trucking along wonderfully here. It's just a matter of getting through the giants. People can bake in the information, and probably within a week or two, we'll start seeing a settling down, presuming there's no black swan event from these geopolitical events or anything like that. And then we'll start seeing a normalization in the volatility index. And then hopefully it'll be a lot easier investing moving forward, because these prices are a steal, man. We're starting to see the FANG stocks get priced as trash stocks into value buckets. I mean, they're still posting incredible growth rates. So I'm hoping Facebook is no different. But what can this week, the market is going to take off next week? See, I don't know. That's the thing, right? Like, nobody knows what the market's going to do short term. That's why people think I'm like sidelining stocks, because I'm trying to predict bottoms and tops. I don't care if they come in at a higher value. My gut feeling is extreme uncertainty, and when I can't pinpoint how I think things are going to do, I don't have the cojones anymore. I don't got the cojones with the kind of money I'm playing with. I don't know how Jeremy does it. You think my risk tolerance would have built up over time, but apparently it's kind of gone out the window, because like I said, I think I'm down. I ran the math. My entire portfolio is down like 5%, which is nothing in this market. So, and that's just because I'm terrified, because everything I've touched recently just likes to go down, but I don't really care, to be honest. Just at this point, it's about diversification and just pinpointing, where the best direction is long term. And honestly, I think for most people, it should be index funds 99% of the way. So don't be surprised if in a week or two, I'm just loading up and maximizing index funds to the largest weightings in my portfolio. But we'll see. You never know. Maybe my feelings change after this earnings period. I don't know what's going to happen week to week. I'm like a little squirrel in my brain with an angel and devil on each shoulder saying, buy the Google dip, buy the Facebook dip, but it could dip lower. So we'll find out. Love the dividend covered calls. Yeah, that's a good way of actually playing these mega cap companies. If you're holding like the QQQ ETF, or even the S&P 500, you get enough shares, covered calls. I mean, Matt Money was talking about buying SPY over VOO, because SPY has better options against it. But yeah, so that's a great strategy for dealing with mega cap volatility. Well, I don't know how easy it is. I'd have to look at the calls for the volatility aspect of things. But I got margin called on Facebook. Oh God, we got people playing the margins, man. Got called on Facebook and PayPal today and forced to sell. If they do well on earnings, now I will snap. Yeah, I mean, that's a tough one, man. The margin call game. I know a lot of guys that have been shorting the market and crushing it lately. I've actually know quite a few people that are like, well, if it's going to keep going down, or that seems to be the trend, why not just see if you can make some extra while going against your longs as an insurance hedge? And that's the thing, right? That's what most people don't understand. It is people like, oh, I don't need cash. I don't need this. And it's just like, yeah, but in moments like this, the only opportunity to take advantage of it is either by understanding how to take short hedges against it with put options or whatever, so you can collect some premiums along the way, or you have to have cash set aside to take advantage of these ample opportunities to continue cost averaging at a better rate. Because this is the problem I have, right? Like, I was discussing this with my girlfriend, because like for her, her portfolio is a little smaller, so she has so much cash on the sidelines. Like, it doesn't make sense for her to sell any of her stocks or play this to any metric, and she could just buy her way into rebuilding her portfolio and really, take advantage of this. Whereas for me, 10% of my portfolio is like 37,000 bucks. Like, I can't just come up with that tomorrow easily to outside of selling stocks to actually take advantage of these dips. So for me, it's like I need a little bit of cash. I need to be cautious with my asset allocation. So I don't know. Maybe I'm just skittish and being a little like no cojones, no more cojones in the market. It seems too much like gambling at this point. So I'm scared. I'm scared, baby. But come on, Facebook, we can do it. You can't go any lower than this. God, how what are we going to get into the single digits on a price to earnings multiple? I did a price to earnings multiple with all these mega caps. Facebook is trading at a historical low since its IPO date. I don't think Facebook has ever traded at this multiple. So this will be neat. Holding cash till the Fed raises the market response. Yeah, I'm not going to play off the Fed. I'm not, like I said, I'm not dictating whether stocks go higher or lower. I never gamble off what the short-term market's going to do. I just, like I said, I want certainty, and then I don't care, because I think buying Google here, like, you're not going to do wrong. Microsoft here, we've got that baked into the market. So I'm always about long-term. Like, where are these companies going to be 3 to 5 years from now? And I honestly think 3 to 5 years, this is going to be a blimp on the radar, because these companies still have excessive growth, probably for the next decade. I mean, we're in this crazy boom, right? I mentioned this on the last stream where, this isn't like the last, go back to 2000. Anytime prior to 2000, it was telcos, GM, General Electric were the largest companies, but those companies were ridden with a lot of debt even back then, right? Like, they were highly cost inefficient businesses that had low margins. Now we're in this new generation of tech with high margins and incredible growth rates. So I feel like we're in a different generation to be holding large caps, and I think they're going to be more resilient than we've seen in the past of what the S&P used to look like. But yeah, so I mean, for me, cash, man, I wouldn't even worry about it. I would just make sure you have enough hedge, either a hedge or cash, and then just start implementing a buying strategy. Don't worry about what the catalysts are. Just say, hey, the markets are down, so when it hits this point, if the markets drop 10%, I'm going to increase my month over month contributions, and I'm going to increase them by 10 or 20%. That's what most of the smart guys I know do. They'll just pick one index, they'll just increase the amount they invest month over month with an emergency fund dedicated to a market correction. So we're about 3 minutes out. Facebook looks like it's holding flat here. So we're at 175. So yeah, I guess it's going to be interesting here, folks. So Jeremy after is 153. Jeremy, God, I don't know how the guy does it, man. When you're buying companies that drop 80 or 90%, I think is a true inflection toward a bubble. And I think that's what most small caps got into in March of 2020, right? Like, they were extremely bubbly territory. And though you really only need one small cap company to take you to the moon and really recorrect your whole portfolio, I feel like the only thing that's done well for Jeremy, because I've gone through all the companies he's analyzed and talked about buying over the last year, and I don't know one that isn't down much, over like less than 50% outside of like Tesla. And even Tesla's down from its all-time high pretty substantially, probably 20 or 30%. So, I mean, I feel like small caps have definitely seen a bubble and a retracement. And the problem with understanding that is the likelihood of them recovering, even if they're considered cheap stocks, is highly unlikely until they can prove earnings capabilities. So for me, small caps, I love small caps. I think there's great value in them. I think there's real opportunity at this point. It's just a matter of picking the ones you like the most and then setting an allocation amount, a percentage point to your portfolio, whether it's 5, 10, 15%, and just not getting too giddy and going above that. Because that's how people get wrecked in this market. And I'm quite confident that's probably what wrecked Jeremy, right? Like, I mean, you're throwing huge amounts of capitals into all small cap. Sector allocation matters a lot to me, man. I really believe you shouldn't, like, this is why I hold really boring utilities, telecom, those kind of companies may be like the most unattractive companies, but go look at TELUS. TELUS is currently one of my largest holdings, right? And I'm very confident in how that's going to perform. And you just got to have that, because in moments like this, man, when you're seeing Johnson & Johnson and a lot of these consumer staples do so well, it hurts a lot when you're highly allocated toward tech growth and small cap. So this is a fine reminder to get used to understanding what your risk tolerance is. This is the first time for him. Yeah, I think this is outside of GoPro, I think this is probably the worst market he's experienced. So we're about 1 minute away, folks, from Facebook and Qualcomm. Qualcomm should help indicate what the semiconductor industry is doing, because I don't think NVIDIA earnings come out at least until May. So at least we got Facebook and Qualcomm, giving us some insight here from the, Google, like I said, if Google has anything to say about it, Facebook should hopefully be okay. Okay, so it's just going to be one of these markets where it's a bit mixed. It's just a mixed reaction with a lot of volatility. High risk. He bought at all-time highs of the market too. Yeah, but he's long term. We'll see how it pans out, right? Like it's fun to make fun of people in the short term here, but you know, it's just hard to tell. Because the guy looks like an idiot today, but he could look like a genius 5 or 10 years from now. But it's not my game, right? Like I'm in a whole different ball game, man. I don't like I said, I don't have the cojones to take advantage of, you know, extremely volatile companies that have the capability of like 90% mood swings. Never go all in at once. It depends what you're going all in at, right? Because I don't think anyone could ever really go all in. I mean, because realistically, they're going to get more money and they'll reinvest. I'm never advocating anyone to just invest once and walk away. It's all about cost averaging. That's the problem too, right? Like you get caught up in these, like an Alibaba situation where you're like, well, I could buy more at dipped. Well, I can buy more at dipped. Well, I can buy more at dipped. And then before you know it, it's like your largest allocation and you've over leveraged and now you're down like, you know, 50+%. It's a painful game, man. It's not an easy game. I'm shorting lots of micro strategies. Okay, so folks, we're here. Facebook looks like it's responding a little negatively off the hop, but like I said, I was surprised at how quick earnings came out yesterday. Because typically I always find there's a bit of a delay from the time we actually get to see earnings. Like, because usually I don't know why. It was like in the early days, Yahoo Finance would get the earnings released first, and then for some reason the website wouldn't update right away. So yeah, let me know, guys. We're just gonna keep an eye on the sticks here. We'll see what happens. I'm gonna leave this open. I'm gonna pull up the Facebook earnings or the Facebook investor relation. And let's see where we're at here, folks. Maybe we finally got the release. So we want financials. Where are we at? So we still got Q4 2021. So I am not seeing anything just yet, unless I'm wrong and they drop at 430. Nope. It looks like things are getting scary right now. Facebook's down to 172.91. So I don't see it on the investor relation page just yet. If you guys see it somewhere, send me the link because I'm refreshing it and I'm still only seeing Q4. So let me re-pull this up. Yeah, I'm not getting anything here. What about Qualcomm? Qualcomm looks like it's trading up 4%. So it looks like the semiconductor industry. Well, I don't know if that's just, let's pull this up real quick. No, 139. They're just bouncing around 142. I don't know if you guys are seeing the numbers here, but the volatility seems pretty maddening to say the least. So Facebook's bouncing like crazy. So what's going on, man? You guys seen the earnings? Don't wait for me. If you guys can see them, send them over because I'm still only seeing, let me go into press releases. So Meta announces, the 2022 results. I'm still not seeing them here because that was an early press release. Come on, man. Let's see this stuff. Let me just, oh God, I hate this. This is unlike yesterday at 4 p.m. dead on. We got Google and Microsoft. Didn't even take a second here. Facebook now at 175. Qualcomm is going through the moon. Let's see if we can pull up the QCOM earnings. Maybe we can get some insights into those. Maybe they released properly and the website's not lagging out. Let's take a look here. Have a sip of coffee while we wait. So we did get the Qualcomm release here. So let me just pull this up real quick and we'll take a look at this before we see Facebook's. I've never really paid attention to the semiconductors, but we do have the numbers up for this. Facebook looks like it's rebounding, so it looks like we're getting a little bit of good numbers here. So we'll check in on Facebook in 2 seconds. Let me just re-pull up because we'll take a look at the semiconductor industry because this always gives some really good insight into perhaps how Apple might be performing. Let me make. Am I pulling up the right financials? Yeah, there we go. So here we go, guys. Kick it off with the QCOM. So it looks like they've, oh my God, 30%. These numbers are wild, man. And this kind of stage in the game after those major boom cycles from the 2000 or 2020. This is still a marvel and a half. So we're seeing 30% increase on revenues from 8.2 billion to 10 billion. So the semiconductor industry, this is giving great insight into what Nvidia might post. Earnings before tax is up 48%, net income up 38%, and the diluted EPS is up 41%. Woo, baby. Qualcomm is crushing it, just crushing it. I don't even think I have to look any farther into this. I think we all know QCOM is fine. So good news for any of the NVIDIA holders. Actually, what is NVIDIA stock doing right now? I bet it's trading up just based off that. Let's pull up the sticks here again. What do we got? So if anything, that should bode well for NVIDIA. NVIDIA looks like it's kind of it's rebounding a bit off its lows from close. Facebook is holding up here. So let's see if we can't pull up those Facebook numbers. Oh, Facebook, give me your numbers, man. Give me your numbers. I still ain't seen their numbers. What is going on here, man? Anybody else have them? Find me the link. Find me the link, folks. We need to see Facebook. It is the showstopper today, and its numbers just ain't coming up. But the stock looks like it's stuck between 174 and 176. Doesn't know whether it's coming or going. Make a poll, bull or bear. I wish I could pull up a poll and put it up in the StreamYard. This video is proudly brought to you by my lack of inhibition to want to spend money on the StreamYard monthly subscription of $20 a month, so we can see the little logo in the top right corner. Is PayPal reporting today? Did we get PayPal posting today? Am I missing something? I didn't see PayPal on the earnings schedule, but let's take a look. PayPal stock. We getting earnings today? So yeah, I guess we're getting it at 5 p.m. So maybe we'll pull up PayPal's earnings here while we wait, because I'm hearing people in the chat getting called out, and they don't want to, or they're getting margin called on PayPal. So they want to make sure PayPal doesn't go up. So why am I not seeing financial and quarterly results? So PayPal, I'm also not seeing Q1 results. This is annoying. What's going on here, guys? What is going on? Maybe we have to wait a little longer. Facebook at 180, 188. Numbers drop, baby. Here we go. Facebook needs some life, man. I sold out of Facebook, my entire position in the 240s and 220s, but I honestly don't care. I would love to see Facebook just jump back to 250 on these earnings. So clearly we've got an earnings drop, but I'm still not seeing it on their freaking page. What's going on here, man? Come on, Facebook. Give me a press release. Give me something. Somebody's got it early. What is going on here, man? Okay, here we go. Here we go. We got it. I'm seeing the thing here. So Q4 2021. Here's Q1 2022. It's only showing me the webcast. How about I show you guys what I'm looking at here? Let me just show you guys, because I'm not lying. It's like, Facebook. This is good news. Facebook needs this. Facebook needs this. But here you go, guys. I'm sitting on the page, refreshing the page. Nothing's coming up. If I go back on the page, I'm still not. So let's take a look. So all I'm seeing here is the webcast for Q2. I'm not seeing it in the press releases. If I go into the financials here and we take a look at the quarterly, I'm still not seeing anything other than Q4 2021. So like I said, this is one of those circumstances where it's always like, Yahoo Finance gets it before we do. And yeah, fake pump. I don't think it's a fake pump. Usually these earnings drop at 4 o'clock. It's just their website doesn't update it as quickly as I think Yahoo and some of these other companies get to view it first. And then all of a sudden the big hedgies get to make the first decision on us, because it's probably manipulated is all hell. But nonetheless here, folks, yeah, Facebook holding up at 188. Maybe we'll take a brief look at the responses on StockTwits, which is usually a cesspool to say the least. Let me refresh this one more time because I really want to see it. Nope, still not getting anything here, man. So anyways, let me re-pull this up. We'll see what the street's saying, or the forums are saying, which I don't know. I grew up on StockTwits forums. It's usually a cesspool and a half. It's kind of how I build up my tolerance to the crazy comments. Mark Zuckerberg, $300 and a year. Inverse Kramer for the win. Dump that. Anyone who bought puts are straight dumb. I'm gonna this. Like I said, guys, this is just kind of, maybe we can click play and watch it in real time. Yeah, we'll just see this. We'll leave this in the background. You guys can see the terrible comments while I continue to look. Yeah, the insiders, man, them insiders. It's so dumb to me that, like, Google, Microsoft dropped instantly at 4 o'clock. And I feel like Facebook's dropped at 4, or the stock wouldn't be responding as aggressively as it is. But yeah, still nothing on the website. Maybe I can let me just Google Facebook while I'm sitting here. Facebook earnings, see if I can find them anywhere else. I don't want to wait till 5 o'clock. I want to see them now, right now. Google's earnings yeah, I'm not even seeing any news releases yet. Very annoying. Very annoying. Come on, man. Show me something good. Show me something good. What's the price at here? We're at 190. Let's go. We need this. We need this. Qualcomm's up, crushing it. Now at $141. Facebook's 190. Yes. Yes. This is like the hope that, we've all been just praying for, man. Rip that Band-Aid off last quarter. Let's get back into it. Facebook needs to bring up the indexes here. This won't last. So far, every earnings hasn't lasted. I mean, Microsoft posted record numbers and they couldn't run back to all-time highs. I think what's happening right now is we're seeing a big correction, because I've been talking about this with the saving rates. I've noticed on my bank that the short-term and long-term savings rates aren't, huge, but they're well over 1% now. And bond rates are starting to go up. And bonds are becoming attractive again. So I feel like we could see a correction in the market where, for the last decade, bonds were highly unattractive. And we could start seeing a correlation of people looking to rebalance their portfolio in like fixed income assets, especially with the volatility that we're seeing in real estate right now. So we could just be seeing, a value correct and what I've been calling a PE multiples contraction. because the S&P 500 looks like it was going to dip below 20 on the multiple, which is still historically high, but it's good because what we're getting is a flatlining market. Earnings are going up, and all of this brings the PE ratio down, right? Like what we're seeing in Tesla. Tesla's PE has fallen off a cliff recently since, they've been posting great numbers, yet the stock doesn't go up. So this is what we want to see in a market. This is what a healthy market should look like. Not astronomical stocks rising, good earnings reports. This gives new investors good opportunities to buy at good prices so they don't have to feel like they're always overpaying. So this is good. This is good. But again, does it last? So Facebook right now, it's still holding around that 190. Again, after hours market's very volatile. Let me refresh the screen. Let's see what's going on. Can we get Meta? No, I'm still not seeing anything from Meta. Can we get anything off PayPal? I should be looking at PayPal here too, I guess. Let's take a look here. Come on, PayPal. So we got I'm not seeing anything for 2021. Anything in the news releases? Nope, nothing in the news releases. Come on, man. Come on. It usually comes up on StockTwits too. As soon as the numbers come out, StockTwits usually shares them right at the top. Look at the homepage. Yeah, if you guys find the link, send it over, man, because I always just hang out in the investor relation page because that's where it inevitably ends up. And if you click press releases, it should come. There we go. Let's get it. Now we've got it. April 27th. They just dropped the press release now. All right, guys, I'm not going to look at it. We're going to watch this together. All right. So let me get out of this screen share. We're going to go over this together. We're going to enjoy the hype because clearly we got some good numbers. All right. If Facebook's already at 190, we got some good numbers, baby. Qualcomm posted good numbers. So we just need a little life out of PayPal, perhaps. All right, guys, let's get into this. So the 2022 results. Let's go. Okay. Total revenue. Oh, actually, wow. Came in at a miss under the expected guidance. I'm surprised they're responding so well. I'm just looking at the top line here, so maybe I'll zoom in so you guys can see this a little better. Let's get this here. So what we got is first and foremost, let's just start with the revenue because it looks like they actually missed the lower end of their guidance of 8%. And it looks like we're seeing about a 7% revenue going from 26 billion to 27 billion. What looks like total, so we've got total cost of expenses have actually increased dramatically. So we've gone from 14 billion to 19 billion. So that's a wicked increase. Income from operations went from 11 billion to 8.5 billion for Q1. Again, this isn't as good as I was hoping. What is happening here? What is happening here? This market makes no sense. Wow, this is still good. Don't get me wrong, because the free cash flow numbers are probably pretty good from an EPS standpoint. Look at this. The diluted earnings per share were expected from last year was $3.30. This year, $2.72. So this is why you can't look at stock prices, because this doesn't make any sense. These are all degraded numbers from this time last year. Wow, I'm actually, my heart is sinking a little bit here, guys. Family day okay, so let's take a look. Family day active people. So family daily active people was 2.87 billion, an average for March 2022, an increase of 6% year over year. Okay, this looks better. Family month of active people was 3.64 billion as of March 31st, 2022, an increase of 6%. Good news there. Family daily active users was up 4%. The monthly active users were up 3%. And okay, this is what I want. I think this is the important part. The ad impressions and price per ad. So in the first quarter of 2022, ad impressions delivered across our family of apps increased by 15% year over year, and an average price per ad decreased. Wait, let me re-say that. I got to understand that. In the first quarter of 2022, ad impressions delivered across our family of apps increased by 15%. So good impressions. That was year over year. And the average price per ad decreased by 8% year over year. So that's not good. Capital expenditures, including principal payments and finance leases, were 5.55 billion for the first quarter of 2022. Share repurchases, they did 9.39 billion of their Class A for the first quarter of 2020. So at least we're getting good share buybacks. That's probably cushioning some of the EPS blow. Cash and cash equivalents, cash equivalent marketable securities were 43.89 billion. So lots of cash. Headcount, it looks like they've been increasing 28% year over year. So they are hiring like crazy. We saw that with Google as well. Google has been taking on a lot of staff recently. So we expect second quarter of 2022 total revenue to be in the range of 28 to 30 billion. This outlook reflects a continuation of our trend for impacting revenue growth for the first quarter, including softness in the back half of the first quarter coincided with the war in the Ukraine. I don't know why that would coincide with the war in Ukraine. That doesn't make any sense. Facebook's globalized. Who cares? If anything, you think people in Ukraine would still be using them. And even though they got banned in Russia, I've watched Russian bloggers. They do the same thing Chinese people do. That's obviously a VPN. Everyone uses a VPN, guys. Actually, it's so funny. The VPN sales and the downloads went through the roof as soon as the Russian war happened. Our guidance assumes foreign currencies will approximately a 3% headwind to a year-over-year growth in the second quarter. In addition, noted previously calls, we continue to monitor developments regarding a viability of transition. Okay, so blah, blah, blah. We're going to have to listen to the earnings call. The only reason I can think Facebook's trading up is because the users are still growing. So they saw a declining, or not a decline, but a flattening of users. So we're still getting user growth. The bad news is the price right here per ad basically decreased by 8%. So there's a few things I can think playing into that. First and foremost, because I use Facebook ads, they've been increasing a lot of the cost basically through taxes. Facebook last year, for the first time, had to pay specific taxes within certain countries that I got hit with, taxes I never paid before. I'm now paying on my ad rates. So that could be hindering the ad decrease by 8%. But my God, these numbers aren't astounding here, guys. I mean, they came in on the low end of guidance. They were expecting 8%. We got 7%. So let's go back to the sticks. We got to go back to the sticks. What's Facebook doing here right now? Oh my God. So anyways, the numbers, they're okay. They're not great. They're not as good as I was hoping. But in a weird turn of events here, folks, stocks can sometimes get oversold. And what are we seeing right now? Probably an oversold Facebook stock, because now we're trading at 197, almost back over the $200. This is why the market never makes any sense, guys. It doesn't make sense. You post bad numbers, your stock goes to the moon. You post good numbers, hey, you're lucky if you jump up 5% like Apple did. So I think what we're seeing here is probably a testament to an oversold stock that's still posting at least inline numbers. You know, the fact that like pretty much, what is it, like most of the world's using one of their apps these days. So I feel like they're just kind of maximizing to the point where they've kind of hit max saturation. You know, they're still cash flowing like a giant, because $2.72 per share is still a huge amount of capital for them, right? Like, I mean, we're talking about the bottom line net income of $7.4 billion. So for the quarter, you know, it's good. It's still great. High margins. Everything's wonderful from that aspect, but we're not talking about what we just saw with Microsoft. So yeah, congrats to anybody that, you know, was patient, bought some of these dips. Yeah, maybe we'll take a quick look at PayPal here too, because where's PayPal on my list? Maybe we'll just pull it up, pure play here. So what's PayPal at? And let's see where PayPal's earnings are at, and then maybe we'll reconvene tomorrow with Apple. Hey man, at least we should see some good movements out of the indexes from this. Come on, PayPal, what's going on here? Why won't it load? I think I just broke my screen here, folks. It froze up on me. It froze up on me. Refresh. I think we broke stock twits. Unresponsive. I know it's unresponsive. There we go. So it looks like PayPal is trading around what, 82.61 after hours, perhaps. Am I missing something here? What a shit show. Do I have PayPal on my watch list? Let me watch. Should it come up to the top? Yeah, so PayPal's been flatlining by the looks of it. Do we have PayPal's numbers? Let me see if I can pull these up real quick and see if we actually got the news release on this. I didn't think PayPal's was today. Am I missing something? It said it was on the thing. So let me go into their press releases real quick. Financials, quarterly, refresh. There we go. Yeah, so we got first quarter. So let's analyze PayPal real quick. See if we can find the numbers here. I'm just scrolling through it to see if I can find the balance sheet numbers. One sec. Let me go see if I can find something a little more clean cut. Now I'll just pull it up. We got the numbers here. Let's just see what's going on with PayPal. Glad I don't have to sell my Rolex to pay for Facebook losses. Yeah, man. Facebook's a weird one. It's a weird one. Bad numbers, lower end of guidance, and the stock shoots to the freaking moon. Yet PayPal has been flatlining. So let's go and investigate PayPal real quick for everybody. What's going on with PayPal? Making sure I'm pulling up the right numbers here. Where was it? There it is. PayPal. Boom. All right. First quarter of 2022, total payment volume of $323 billion, growing 13% and 15% on an FX neutral basis. I'm not sure what FX, maybe just a foreign exchange basis. Net revenue of $6.5 billion, growing 7% and 8% on the FXN basis. Again, I can only presume that's Forex. Revenue 15% on spot basis. The GAAP EPS 43 cents compared to 92 cents in Q1 of 2021. So they missed an EPS of 88 cents compared to $1.22 or $1.22 in Q1 of 2021. So again, it looks like, you know, miss across the board, yet the stock is flatlining. This just shows you how suppressed these stock prices are. Even if they're missing earnings, their stocks aren't going lower. That is a really good sign that perhaps we are starting to see bottoms in the market here. What else do we got? So they missed. So nothing astounding here. Key operations and financial metrics. Q1 2022. So total payment volume is going through the roof. So it looks like a lot of people are using PayPal. So the question we got to ask ourselves: if the payment volume's up, why is the total income down here? Because net revenues, only up 8%, and the EPS, we want to figure out why the EPS is down so much. So that'll be something to look into if you're a PayPal shareholder. Perhaps listen to where the expenditures are coming into play, why everything's up except for EPS. This is the same problem with Google, right? Like the numbers were good, but EPS was down. Yeah, so that's a weird one, man. That's a weird one. Yeah, what's going on here, man? Anyways, maybe we'll take a final look at the sticks here, folks. So that's PayPal. I don't know enough about PayPal, but let's just see how everything's performing into the first 30 minutes of after hours. And then you can't expect what's going to happen here, guys, because, like yesterday, we saw a wicked sell-off in Google, Microsoft, all selling off into the beginning and then rallying back after. Facebook is a sign that we finally hit a bottom in the market here. This is probably a great entry point on most of these stocks. Like I said, Facebook, a little disappointing. I'm going to have to listen to the earnings call, see what the heck's going on there. But yeah, it looks like PayPal is starting to rebound into the green. So there you go. If there's, look, PayPal's now, up to $84 in after hours. This is a sign of the bottom here, folks. This is it. If there was ever a sign that things are getting oversold, I think this is the exemplifier right here. It looks like Facebook could be over $200 tomorrow. What is this doing for Google? Yeah, so look at Google. Google can't even get up. So anything that was just super suppressed, people are finally saying, hey, I've had it. This company's making good money still. Like, let's buy the after hours. Let's load up. Let's re-average into these, because that's all I can tell what's going on. How does Facebook post such shitty numbers like that? Facebook used to be growing at 20% rev growth. God damn, what happened, Facebook? God, you were my largest position once upon a time, and now I'm tearing up a little bit. Bitcoin is next to fall. Bitcoin, I don't care what it does. Bitcoin is a non-productive asset. It doesn't do anything. It's like gold. I just hold it. I don't care about it. It's like an emergency fund for me. It just sits there. So I'm still holding my Bitcoin position, right? I don't know. That's so speculative to bet on. At least with Facebook, you could say, hey, I don't think earnings are going to be good. I'm going to short Facebook. Then everyone shorts Facebook's and earnings suck, and now we're at $200 a share. So anybody that decided to short or think Facebook was going to get crushed, they're idiots. This is how unpredictable and gambly the market is. Facebook can only grow so much. I still think they're great, man. The numbers they're bringing in are phenomenal. Don't get me wrong. And I still think there's huge future prospect in what they're doing with VR by like miles. They're starting to get into the same kind of, results in the holidays that, they were seeing in sales for the PlayStation and things like that. So don't get me wrong. I think Facebook's great. I think it's a great value here. I think it's a good opportunity by any means. But yeah, it's just what a weird market, man. So at this point, I'm going to be listening to that earnings call, get some quick insights, see what's going on. We'll reconvene tomorrow with Apple and Amazon. After we get through those two earnings period, everything will be dictated. The markets will probably price in most of the expectations moving forward. As I mentioned, I don't think inflation is going to be out of control. I think we're going to start seeing a taming of inflation. This is all setting up to have a really good, hopefully beginning of getting into Q3. Q2 will still be a little rocky with some of the lower end guidance that we're seeing with some of these companies like UPS, lowering the e-commerce guidance. But all of that future expectation will get baked in with Amazon. And then, we're seeing the Chinese markets continue to crash. So these are all good buying opportunities across the board. All great buying opportunities. But as mentioned, 99% of people, including myself, will likely start indexing because I want Google, I want Facebook, I want NVIDIA, I want Apple, I want Microsoft, and they're all 50% of the top weightings in the QQQ ETF. So maybe that's a better route. And if you're really speculative and you want some good long-term growth and you believe in it, TQQQ, let's triple leverage that stuff. Inflation will stabilize this year. I honestly think inflation is stabilizing now. Like I said, we're all hearing about what we saw in the past, but if you look moving forward, all the commodities are leveling off or dropping. If commodity prices come down and, pricing and logistics and all that stabilizes, we're going to start seeing prices maybe go to negative inflation. We're already seeing it on Amazon products. If you go on Amazon and you just look up general products and you look at the competition with pricing, Jeremy from Financial Education did it with the raising desks, and I found it very interesting because some people were still trying to charge the upper end of prices, but you start seeing people able to price compete, right? And we're going to see this, I think, really heavily in the real estate market. Me and my mom were arguing about this with the pool guy. If you try and get someone to do construction on your house right now, they try and rip you off by saying, oh, we're too busy, we're too this, we're too that, so we're going to charge you like a 30 or 50% premium. All of a sudden, what's going to happen is things will cool off. people will start doing less renovations, less things, and then all of a sudden these guys will start competing for pricing so they can get more work, and then we start seeing negative inflation. And that's just one example, but we'll see it with everything. I think that's an inevitability. So I'm very confident if you're buying stocks right now after this earnings period, you'll probably do very well by the end of the year. I don't know if that's going to be true. Obviously, that's very speculative, but 3 to 5 years out is probably the best term to go into this. So anyways, I really appreciate y'all coming out. What a fun earnings season it has been. Very pivotal, just stuff none of us could have ever predicted. I never thought PayPal, Facebook, any of these stocks would be as low as they are. So yeah, if you got the guts, TQQQ all the way, baby. Anyway, stay cool, stay awesome, folks. And I look forward to